What is behind this rally? Will it be sustained?
Yeah, well, I think it's going to last for a number of days at least. Normally the Chinese market move on momentum. And I think, recently you've seen the strengthening yuan, so that is attracting foreign capital to come in. And when foreign investors, buy into the Chinese market, even though there are thousands of stocks to choose from, they tend to focus on those two names, which is the Maotai, Wuliangye, and some big financials, because those are the famous brands from China, and everybody knows, and they pay really good dividend yield and generate earnings growth and cash flow growth for years and years. So those are very large index component for the Chinese market. So once the foreign funds come in, they buy into these stocks, and it tend to push up the stock index.
How broad-based does this rally need to be to keep it and sustain it?
Yeah, well, actually, you don't need to be a very broad-based rally. For example, before the Chinese New Year, right? So for a number of months, the entire market was driven up by a number of very large cap stocks, most notably Maotai and Wuliangye. So even though the very large cap are doing very well, the smaller caps had it really tough. So you have thousands of stocks falling, but then at the same time, a handful, maybe 50 stocks that is going up before the Chinese New Year. But that is enough to push the Chinese market over 3,700 points. So I would say that you don't need a broad-based rally to make the market go up.
And how, just to pick up on your earlier point, why do you say only a few days for this rally?
Yeah, well, normally the Chinese market sentiment comes and goes, right? So, suddenly out of a sudden, you have a very gigantic move in the market, because some very positive development coming from currency and from commodities. And then, once the funds come in, if you don't have new funds to come in to follow up, then the rally will sort of dissipate to a certain extent.
Okay, I want to bring in the commodity story as well, and two sort of connected questions to this. So first is, note that it doesn't take just one round of intervention for them to successfully, let's put it, deflate commodity markets. And we're getting another line today from the Shanghai Futures Exchange. So where do you think that story goes on commodities? And can I draw a direct line, Hao, between what they're trying to do with asset prices in commodity markets to perhaps a limited rally that you say might be the case for equity markets as well?
Yeah, I think the commodity market has been capturing attention since the Chinese New Year. And also, because the commodity market has been doing so well, then it's actually diverting funds from the stock market. I think that's reason number one. And I think, as the commodity rally goes on, the authority may be concerned that the upstream inflationary pressure could be passed down onto a downstream sector. And once that happens, you probably have to be forced to raise interest rate, right? So it wouldn't be a desirable scenario. I think that is one of the reasons why the authorities started to intervene now. But as we have seen the episodes in 2016 and 17, right? So back then you have a very similar strong rally across the board for the commodities market. But then back then, it takes more than 4 rounds maybe, of policy intervention to really calm down the commodities market. So during the periods of intervention, you tend to see very heightened volatility in commodity prices. But then on the absolute level, commodity prices continues to go up. All right. So remember when they started to intervene in 2016, commodity price continued to go up until the end of 2017. So it lasted for almost 2 years.
Okay, so Hao Hong, how does that view on commodities and a continued increase in pricing play into your views, maybe change your views in terms of margins for corporates and the earnings outlook?
Yeah, I think it really depends on how people see the driver of commodities. From my perspective, I'm seeing it as a reflection of how the economic recovery is playing out. So I think, as the economy strengthens, it tends to reflect through, some of the more sensitive sectors such as commodities. All right, so it shouldn't be a surprise to many people. But then at the same time, even though some corporate margin may be squeezed, but you're seeing very strong margin gain in the upstream sector, And also, because it's a reflection of a strong economy, it tends to bode well for the overall market. So historically, what you're seeing is that commodity price rally tend to be concurrent with the stock market rally.
Very quickly, your top conviction call, Hao Hong, national defense stocks. Tell us why.
Yeah, well, that's one of the few risks that on top of people's mind. Even though after Donald Trump, the country's relationship between between China and the U.S. is sort of tricky. National defense is a niche sector that tend to do very, very well during an inflationary environment, and also it's a good hedge against any potential risk that is not foreseeable at this stage.